Hello, everyone. Knox Ridley here, portfolio manager with the IO Fund. And this is our weekly broad market check. And following up from last week, where we were building the case for a meaningful low being put in, we're going to continue that evidence today and take a look at the really narrow path that the broad market has to take in order to fully confirm this. So we'll give you some levels to monitor, which can help you better risk manage. So continuing from last week's theme, we're talking about divergences. One of the main things we look for whenever a big trend is reversing or about to start in the opposite direction. We tend to see markets markets don't top together and they don't bottom together. So when you start seeing one market going up and the rest are going down, you know that that market that's going up is probably likely to follow. And the same is true in reverse. And so we talked about various markets and stocks that were putting in lows and signaling that they're in bigger uptrends prior to the S&P 500. And we're going to take a further look at some markets around the world that are showing the same thing. And I want to show you this right here. We'll start off with the Canadian index at TSX. And the reason why I track this is because it has a history of leading the S&P 500. And what you're looking for is when all markets globally or all your major markets are moving in the same direction, you're in a very powerful trend. And you want to look at some of these markets might be bottoming first, which a lot of them have been. Actually, just look back at like Japan's Nikkei. I mean, it bottomed back in March and the S&P continued down. Same pattern happened in 2021 where it topped first, So anyway, what I want to show you here is that the Canadian index from the COVID low, it looks like an incomplete pattern. Uptrends or markets trend in 5-wave patterns. And the key thing that you want to look for is you don't want this fourth wave right here to go into first wave territory right here. So when that happens, that means that this is not a 5-wave pattern. But as of right now, we have a very short and shallow second wave. And that tends to mean you get a complex and difficult fourth wave, which is exactly what this is. This is an absolute mess right here. And this is what most markets look like around the world, this bear market that we're in. But as you can see, it looks like an complete pattern. It looks like it needs one more move higher to complete a bigger uptrend off the COVID low. And as you can see right here, it just took back this trend line. And so this is the kind of bullishness that I want to see to help confirm that the US may be putting in a bigger low. But the Canadian market is actually signaling it looks like an incomplete pattern. It needs one more high. But also look at the Japanese Nikkei. Same situation. 1, 2, 3, complex fourth wave. And it looks like it needs one more fifth wave to complete this move off of its COVID low. And if we look at the Australian index, where are we at right here? Same pattern. 1, 2, 3, 4, 5, and it looks like it's about to take back this downtrend line. So we have 3 markets at different regions of the world signaling that they need one more move to higher highs in order to complete this bigger uptrend off the COVID low. And so that to me is very bullish for equities. But now let's take a look at the actual US markets. The Dow Jones, for example, very antiquated these days, especially compared to fast moving and fancy tech. But the Dow looks like it needs one more move higher. Look at this. We have a first wave, very short and shallow second wave, complicated mess of a fourth wave, which falls in line with this shallow and quick second wave. And it looks like it needs one more move higher to complete this 5-wave pattern off the low. And look how close it is to its 200-day moving average. If it can take this back, that's going to be a very bullish sign. But the relative strength right now of the Dow and small caps is something I consider to be quite bullish. Another stock, there's a few stocks that I track, Caterpillar being one of them, very important to global growth. It looks like the Dow, 1, 2, 3, 4 needs one more move higher in that fifth wave. And look at this breakout move today. And this looks like a gap and go situation. And if we actually take a look at the 5-minute chart here, I mean, we were tracking this very, very early on. We'll go to the hourly chart. It bottomed before the S&P 500 in late September, gave us a nice clean 5 waves off that low, which hoping to be a part of a bigger 5-wave move. So this would be your first wave, second wave, clearly a third wave. When you get these kind of breakout gaps right here, that means you're in the middle of your third wave move. So we have a developing 5-wave move off that low, which is further confirming this scenario that we need one more high than the market. So while everybody's focusing on Facebook and Google making new lows, they seem to be ignoring stocks like Caterpillar and global markets that are saying, no, we actually want to go a little bit higher. So I consider that to be quite bullish for stocks. So let's take a look at the S&P 500 and get some levels. Bigger picture from the August top. This is the count that I'm working with. I think that it's completing a complex correction right here, which is a 3-wave correction. So we have the A, B, and C, and the C wave is a 1, 2, 3, 4, 5. I've seen a lot of counts about how this market can be counted. I mean, it's such a complicated bear market pattern that almost every structural analysis that I look at has a different count. And so what I want to do is try to simplify this. There's only 2 ways this could be: a 5-wave move or a 3-wave move. I have a 3-wave move, 1, 2, 3. But if you want to do a 5-wave move, look at this: 1, 2, 3, 4, 5. So no matter how you count this October low is a complete pattern. What this tan mark, this tan line right here is just a place where cycles are clustering together. We do a lot of cycle work at the IO Fund to try and get, whenever you see price and time come together, you have a really good chance of getting an excellent entry or exit if you're trying to get out of the stock. We actually added a significant amount down here because price and time are coming together. I showed you the price part, full pattern, hitting a very important support zone. Let me show you the time part. I do a lot of work with Gann, and all Gann is he was a master of cycles. And this is the S&P 500. All of these different colors are different cycles that seem to be signaling a turning point in the S&P 500's count. So we're looking for inflection points. 75% of the time, they mark a change in trend. And 25% of the time, they mark a kind of a railroad track bar, like a continuation of the trend, like your third wave kind of move. And what I want to show you is on October 13th, we had 4 cycles clustering together. And the last time we saw this kind of clustering of cycles was at the very top of the S&P 500. So this was telling me that something important was going to happen. The fact that we were trending down and a very hard downtrend into that level told me it was likely a trend reversal, which is one of the things that we use to actually take off our hedge for a really nice gain and add significantly to our long portfolio, which has been a good move. So this is the broader picture. And if you take a look at the, if we take a look at the actual, let's zoom in on this bounce right here. Go to the 15-minute chart. Once again, we're looking for 5-wave moves, right? A 5-wave move off a low tells you the trend is reversing, right? And it kind of put that in the context of all these global markets, Caterpillar, the Dow. It looks like they want to make one more high before a bigger bear market happens. What we need the S&P to do to fully confirm that is we had this 5-wave move off this low. We needed to develop into a bigger 5-wave move. So 1, 2, 3, 4, 5. All right, so that's a lot that it has to do. As of right now, we only have 1, 2, 3 waves off that move, which is dangerous. Until we get that 4 and 5, it's in a dangerous posture. Let me just put it that way. So here's the needle that we have to thread in order to get there. And so far, it's been doing it quite well. The low that we're getting today, we need to hold in here, 37.80 to 38.35, and turn back up to make one more high. The next level up I have is 39.90. And if we can do that, then we're building the case even more that this is developing. But you see this tan mark, this tan bar right here. So this is some cycles coming together. It's more minor than we saw in October, but it's still worth noting. And it also aligns up very well with the jobs report and the election and the Fed meeting. So we have a lot of market moving action. And so if we're trending up into this kind of early November area right here, and we're in this region, this 40.50, 40.80, there's a lot of reason to be cautious. This right here, this region is multiple techniques coming together telling me that this is going to be a difficult wall for the bulls to break through. And also, the 200-day moving average looks like it's going to be right around this region if we continue higher into early November. And as we know, the 200-day moving average, I mean, it stopped the last bear market bounce dead in its tracks. And so if we do hold this level and turn up and keep grinding up higher into 40, 50, 40, 80, that's the time to probably build a little cash, put on some hedges. And if we can confirm that 4 or 5, guess what? That's your first wave, and your second wave retrace is going to take you back below this level right in here. And so that would be the time to take off your hedges, maybe add some more cash. So that's the best way to risk manage the situation, in our opinion. And it's the way that we're doing this. There's still some very quality tech companies that we are targeting that we want to get at lower prices. And this is basically the roadmap that we're taking. The alternative count is this right here. Keep in mind, we only have 3 waves up, A, B, C. And so markets are quite obsessed with symmetry. We see this all the time. And the hardest target, the most likely target for, if this is a 3-wave move, which means that it's just a bear market bounce and we have new lows probably going into the end of the year, if this is what's playing out, the place that you'd want to be cautious is here. This is the length of the A wave, your first leg up. And we take that exact same box and duplicate it to measure the length of the C wave, the third leg up. And it comes in at about 39.30. You go into, whether you're in log or linear mode, it doesn't really matter. I tend to go with the one that's the lowest just to be safe, which is linear. So 39.20, 3900. If we push up into here, you're going to see sellers probably step in. And the real test will be if the sellers can take us down below 37.75. If they do, then that blue bullish count is off the table. It doesn't mean that a new uptrend can't form. It just means that it's going to be a lot more complicated to navigate. We've been seeing 3-wave moves in all directions in 2022, which has made this quite a nightmare to navigate. 5-wave moves means easy to target. You can get a really good trend and really identify likely where it's going to be going. 3 waves just opens up the door to all kinds of possibilities, and it's very difficult to navigate. So anyway, those are the levels that we're looking at. So far, so good. See a lot of bullish stuff, a lot of bullish confirming markets around the world and in the US. Don't just focus on big tech. We saw Google, we saw Microsoft down, and yet the market was up, meaning new leaders are developing. It's important to identify that. So I hope that helped. If you like what you see, please sign up. I have a YouTube channel. I do these weekly videos to give you some context in the broad market. Sign up there. And we also have a site, the iofund.com, where we do this broad market analysis that we use to build a growth portfolio in tech and in crypto. And we provide institutional level analysis, both fundamental and technical, within those fields. So thank you very much.